So I'd like to welcome everybody to the North American Expats in France Quarterly Financial Forum. This is our fourth quarter forum. And what we're going to be talking about today is year-end planning strategies and preparing for 2023. With us today is Brian Dunhill of Dunhill Financial. Brian there, he's waving, but he's not going to actually he will be speaking at some point, but he's acting more as a moderator today. But the person who's really running the show is Anya Berezow, and Brian called her the local Tsarina, but she's really a certified financial planner, which is better for our purposes, that's for sure. And just so you know, we are recording this and you will be able to rewatch it, so you don't need to take heavy notes. And you might want to mark your calendar for February 8th, which is our next financial forum. And now what I'm going to do is I'm going to let Anya take over. I may be asking...
One more thing, Adrian. We need to remember the date that you're going to be guest appearing on Anya's
webinar. Thank you for
reminding
me,
what's
Brian.
The date of that? Because everybody wants to hear Adrian's full story, and that's I'm looking forward to that one. Anya, do you have that date by your side?
Absolutely. It's going to be December 7th. It's a Wednesday at 3:30 p.m. French time.
Perfect.
Thank you. Yes, I'm intending on being there. Okay. And I suppose we will be talking about money and other things.
And your story, Adrian. Everybody wants to hear your success story. So we're very much interested and definitely looking forward to that date.
Okay. Well, thank you very much. But I think for today, we should get into our year end, taking a look at what we did in the past and how we're going to fix that for the future. And so, Anya, take it away.
Thank you so much, Adrian. So after another full year of changes, now the end of the year is a great time to review end year planning strategies and begin thinking about really 2023. So we're making this into a checklist for everybody to be able to follow quite easily and to keep us all organized and be able to prioritize this well. So today we'll talk about 4 big categories as far as planning. We'll start with my favorite topic, which is retirement planning. Then we'll move on to investments, charitable giving, and other financial planning considerations. So we'll start right here with retirement planning, and really what should we remember about retirement planning as we're approaching the end of the year.
Anya, I would like to make a comment right this minute. I just read this fantastic article about how to live as long as 100 years, what you can do in your life, in order to live longer. And and people are living longer. So that means we actually do need to prepare and save, and plan for a longer life. And one of those things is, of course, you live longer when you don't have to worry so much about money.
That's exactly right, Adrian. So when I actually do long-term financial plans for our clients, we look at the next 40, 50, 60 years of their lifetimes, depending on how old they are. And we set 99 as life expectancy. We want to be conservative about that because some of us are living that long. That's definitely more common now. So saving in a tax efficient manner is definitely more important. And that's why we want to talk about IRAs, Roth IRAs, pension plans today, and how to really take advantage of those. So for some of us that are in the US, we're very familiar with IRAs, Roth IRAs. For those of us that have lived in France for a long time, maybe less
like
so.
Me.
So we'll break it into the basics to make sure to get everybody up to speed on what we should be doing and what those terms mean.
What's a backdoor Roth IRA? What does that mean?
Oh, great question, Adrian. So if somebody doesn't qualify for a direct Roth IRA contribution because they make too much, there are income limits when contributing to a Roth IRA. There is a strategy to contribute to a traditional and convert it to a Roth through a backdoor Roth strategy. So this is a way for high income earners to still get money into a Roth IRA.
How much is too much?
How much is too much? Great question. So Roth IRA contribution income limits depend on how you file your taxes in the States. So if you are filing as a single individual, if you're making over 144,000 USD per year, you no longer can make a direct Roth IRA contribution. For married couples, it's closer to 214,000. So for those higher income earners, there's still ways to possibly get money into the Roth IRA. But I guess I could go back for a second and really talk about the differences. What's a traditional IRA? What's a Roth IRA? And then we'll go back to the backdoor Roth strategy in a second. So really, when saving for retirement, saving in a tax efficient manner is important. And so when putting money into a traditional IRA, you could possibly get a tax deduction for putting money in, and that money grows tax deferred over time. And when you retire and take money out, you have to pay taxes, ordinary income taxes on that. So you get a nice long period, hopefully long period of tax deferral, but you pay taxes because you got that tax deduction at the beginning. Now, for most expats cannot take a deduction for a traditional IRA contribution. That's why a Roth IRA is so important for our expats, because even though there are income limits for when you contribute, if you're allowed to contribute, when you do, that account has great tax advantages because it essentially grows tax-free. So as you realize capital gains, your accounts gets bigger and bigger every year. Eventually, when you withdraw it in a retirement, you don't pay taxes on it. So that's really the beauty of that account. With a side disclosure, you should keep money in there for at least 5 years, based on the rules for Roth IRAs. Now,
I mean, I know this is okay. For me, this is really complicated. But so I assume this is a service you actually offer to help someone, make the best decisions, right?
Absolutely, Adrian. And it does get more complex for expats too. So we've made this chart that's in front of us right now to help us determine whether someone who is a US expat can actually make a traditional or a Roth IRA contribution. So I should mention that the contribution limit is $6,000 per year, or $7,000 if you're over 50. That limit is going up next year as well. And really, as far as expats are concerned, I like to use an example when working through this chart to help us just visualize what this really means. But let's say we have a hypothetical scenario of a person that's living in France who is making 100,000 euros per year, and they want to know if they can make a Roth IRA contribution. So first we asked, do you have earned income? Well, we just said they have $100,000 in earned income. Then we want to ask or think about how that person is filing their US tax return, whether they're using tax credit or foreign earned income exclusion. If it's foreign earned income exclusion, they would not be allowed to make a contribution. If you're using tax credit at that income limit, it could make sense for them to use tax credit. That's something to confirm with their accountant. But if they are using tax credit, that's great. Then we kind of move down the decision tree to how they're filing their tax return. I kind of gave this away already because that's a single person making under that 144K a year. So she could hypothetically just make a direct Roth IRA contribution and keep that account at a tax-free status till.
As long as it's considered a tax credit, not tax exclusion. Right?
Exactly.
Okay.
Yes. So with the caveat, foreign earned income exclusion in 2022 is 112,000. So if this person hypothetically made 150,000, they're not excluding all of their income. They cannot exclude all of their income on the US side because FEIE is only 112. Then they could possibly make a contribution if they meet other qualifications. But hopefully this chart, which we'll share following this event, will help our expats make the decision. It does get complex, so certainly if somebody needs help, we invite them to consult with us on this.
Okay, that's what I'm doing, okay?
Sounds good. And here's just as a side note, because Adrian, you've asked about what's a backdoor Roth IRA, and we've mentioned that's a way for high income earners to really get into a Roth IRA. there's a important note about this, that when we do this, we want to be sure that you don't have existing balances in IRAs, SEP, or simple IRAs, because then your backdoor Roth could become taxable. So you just want to be careful about how you make those decisions. So that's what this slide is really about.
Okay.
Okay. Along the same lines, as we're getting close to the end of the year, Roth conversions is a hot topic. It's a question that I get from clients all the time. And that has to do with moving money from your traditional IRA, which is tax deferred, into your Roth IRA, which is a tax-free account. When you make the conversion, though, you have to pay ordinary income tax on that conversion. So it doesn't necessarily make sense for everybody to do this. But for those that maybe have lower income years, so let's say somebody works at a university, right? And maybe they take a sabbatical for 2 years that's unpaid and they don't have any income, that could be a good time to consider a Roth conversion. Or Adrian, probably for the clients that you work with and we work with frequently, when our US expats are retiring in France and retiring early, meaning prior to age 72, if they're going over to France and if they are planning to live off of their investment portfolios, so they'll have no pension income or Social Security income for several years, that's an excellent opportunity from a tax perspective to be converting some of the traditional
That fits a lot of, yeah, and that fits a lot of our situations. I mean, other clients that I talk to, it's, yeah.
Absolutely. And
they're planning for it now. You know, they're about to retire. They're planning for it now. And it makes sense to do that before they actually make the move.
Before they make the move, or even after, you know, when they make the move, as long as they're not working in France, all the distributions from traditional IRAs get taxed in the US. So we could spread this out over several years before Social Security income kicks in or before any other pension income kicks in. It's really a great tax saving strategy. So definitely something to consider. Now, the deadline for this is December 31st. So if someone is in that situation, we don't have a ton of time left, just a little bit more time.
Sounds like they need to make an appointment with you very quickly.
Very quickly. Exactly. No, it's I like to mention this as kind of high up my list, because this is something that people forget about, and it's a great tax benefit that we could be utilizing. So definitely something to consider towards the end of the year. This slide we kind of already covered, but I do want to talk about that just to clarify and kind of remember. We talked about IRAs or traditional 401ks, which are on the left side as being tax deferred accounts. So those types of accounts, when the distributions eventually happen, those are taxable. And on the right side, we've got Roth IRAs, Roth 401ks. When money comes out, it's tax free. So that's
this is really helpful.
Yeah,
it's very helpful. Yeah, it's a great chart.
Perfect. I love it. So that's just a kind of a summary of what we just discussed. However, there are definitely many other accounts and other considerations as far as contributions are concerned. So for those of us that are still in the US, if you do have access to a 401k, that's another great way to shelter some of your income from taxes. You can contribute up to $20,500 per year if you're under 50, so much higher contribution limit, and you don't have to pay taxes on the money that you contribute to a 401k. So if you haven't maximized it for the year, it's a great time to be thinking about getting that to the maximum if that's affordable. For those of us that are already outside of the US, reviewing our options as far as tax advantaged accounts it's a great time to be doing that. Do we have any pensions that we could be contributing to on tax advantaged basis? Or even more importantly, Adrian, and you probably see this a lot, where our US expats are moving to France, but they're still running their businesses out of the US with US clients, right? And so
absolutely.
Right. And so I see that a lot too. And for those self-employed individuals that are actually taking a salary out of their or taking money out of their business, they could have the opportunity to set up self-employed retirement plans, a simple IRA, solo 401k, and that could give them a great tax benefit. So let's not forget about our self-employed individuals as well.
That's a very good tip.
Yeah. So with that, that's all to say, be sure to review what options you have, and it's important to just prioritize which accounts we should be contributing first from a tax standpoint.
I talk to an awful lot of people, who are possibly, maybe they're working right now for a company or a law firm or something like that, and they're intending on making a move, but working more as a consultant or as an individual, as self-employed. So that's a really good tip in terms of their future planning.
Absolutely. It, of course, depends how their business is set up, but it could potentially be a huge tax benefit for those individuals. So let's definitely keep that one in mind. Along the same lines, on the previous slide, I just wanted to mention to also be sure to review your employee benefits for those that are employed by different companies, meaning if there are any benefits that maybe we aren't taking advantage of, or some companies are issuing stock options. And even though calculation of taxes does get complex on those, especially for US expats, it's a great benefit to make sure that you're taking full advantage of with your company. Moving on though, on this slide, another topic that people frequently forget and that made our checklist today is consider setting up a Roth IRA for your kids, grandkids, or kids you care about. It's a little known fact that you can set up a Roth IRA for somebody under 18 just as a custodial account, as long as the child has earned income or is running their own business. So it's a great way for kids to really get a head start on retirement savings.
The kid has to be under 18?
Yes, if they're over 18 and they have earned income, they just go by the regular rules.
Okay, so it's too late. It's too late for me to do that for my 37-year-old, right?
but she could do that for herself, right? As an adult.
Yes.
And then when you have grandchildren, Adrian, then that could be an opportunity.
Okay, well, you'll have to talk to her about that.
Alrighty.
Anyway, I already have my list of things that I'm going to be talking with you about. I can see. Okay, keep going.
I love it. Okay, perfect. So another thing to definitely be thinking about towards the end of the year are your required minimum distributions. If you're over 72, because the deadline is December 31st, and we cannot skip RMDs this year in 2022. So we definitely want to take that. If you don't, the IRS has a hefty 50% penalty for those who are late. So let's definitely keep in mind to satisfy those distributions. Also, for those of us that have inherited IRAs and where required minimum distributions are required, we also want to be remembering about taking those on time. Now, for those of us that have our financial plans fully in order, and let's say we don't need our required minimum distribution, we might want to consider gifting it to charity to possibly avoid ordinary income tax, but it just depends on your specific situation. So more on that.
So when you said RMD, that stands for required minimum distributions, I gather.
That's it.
An RMD, okay.
Exactly. Okay, and then lastly, as we're talking about all those retirement plans, we also should remember about our beneficiary designations. Again, that's another topic that's being left out all the time. So year end is a great time to look over whom we've designated as our beneficiaries on our 401ks, IRAs, Roth IRAs, because those designations often supersede anything we say in our will or in our trust. And so it's important to review those and have those up to date to avoid any costly mistakes, I would say.
Oh my God, this is so useful.
I love to hear it. Of course, along the same lines, having your will that's up to date and powers of attorney to make sure that's all still reflecting your wishes is important, and even more so for expats, right? Because we've got our international lives that are a little bit more complex. So estate planning is more complex as well. So taking into consideration the fact that we live abroad and planning for that as far as our estate planning, that's also key. So here we'll shift gears a little bit and we'll shift gears from retirement planning to talking about our investments, really what we should be thinking about as we're approaching the end of the year. So first, rebalancing accounts. Having a year like 2022 behind us, if we, at the beginning of the year, we set a target risk level with everything that happened this year, likely our target risk level could be off balance. So really, as stocks and bonds go up and down and our target portfolio drifts, of course, we want to rebalance by bringing your investments back in line with that target allocation. So that's something that a lot of us will be doing towards the end of the year. Equally as important, after a year like 2022, reviewing the gains and losses in your taxable investments is a very, very valuable tax strategy. Maybe I'll give an example to explain how that works. Please. Yeah, okay, perfect. So let's say that sometime during the year we bought S&P 500 ETF for 100,000, and now it's the end of the year, and let's say that ETF is worth say 90,000. So we have a fictitious loss of 10,000 within that security. One thing that we could do from a tax standpoint is to harvest that loss, meaning sell that S&P 500 ETF, put the $10,000 loss in your pocket, and immediately afterwards buy something similar, like KLD 400, for example. So you're still invested in the market, and IRS allows that kind of a tax harvesting or realizing that kind of a loss. And that way you get to use that loss later on to offset gains or possibly your ordinary income in the future. So that's one strategy that's been very, very valuable this year. And we've done a ton of tax loss harvesting as we've been going through a lot of market volatility to really improve our clients' tax situation longer term.
Well, you've sort of lost me on that.
Oh,
okay, because it's terminology I'm not personally familiar with. But I understand the basis of it, because as we've watched the market, go up and down in different areas, I assume that as long as you're investing and moving your investments around to always be in the investments that are going to have the best gains, then you can at least sort of stay balanced. Am I making any sense whatsoever? No.
A little bit. And I guess I didn't either. So really, tax harvesting, let's think of this as a tax strategy, more so than an investment strategy, right? So we know that we want to be invested because we don't want to be timing the market and pulling out and going back in all the time because we know statistically it doesn't work. Right. So this is more of a tax strategy. If we have something that's at a loss, we want to put that loss in our pocket and stay invested. That's really what tax.
Okay, I get it. I get it. Okay, I'm gonna leave the leave this up to the professionals. Okay.
I would say it's not necessarily something that I see individual investors doing on their own very often, but we certainly have become very efficient in getting that done for our clients. It's important, definitely saving a lot in taxes in certain cases, especially during years like 2022, where we've seen quite a bit of volatility.
Trying to do this on your own, okay, as an individual, to try to really invest your money on your own and make your own decisions is gotta be so difficult. You have to be so knowledgeable. I can't even imagine how you could even possibly begin to do it unless you are, if that's all you're doing all day long and you are, and you are a professional. Otherwise, I imagine that the advice is invaluable.
Well, thank you, Adrian. Yeah, we get
I
to
can't-
remind our clients about those kinds of factors all the time, and definitely find a lot of strategies that they haven't been thinking about on their own. So I would say for a lot of the clients that makes a lot of sense as far as getting somebody on their side or a team that's working to make sure to improve their financial situation. So that's definitely key. Now, as far as some other year-end planning items, I want to talk a little bit about income needs. So for those of us that are retired, and for those of us that rely on our investment portfolios to partially or fully support our lifestyle, we want to work with our advisors or with our budgets to figure out how much of the cash flow is expected to come from your portfolio, and to review those income needs on an annual basis, because essentially you have a choice where to take your money from if you have traditional IRAs, 401ks, Roth IRAs, taxable investments. And so each and every year with my clients, I like to make those decisions in early January to figure out, well, what's your income this year? What's your situation like? How much do you need? And where do we take that money from to be tax efficient? So that makes number 11 on our list as far as what should we be doing around beginning of the year, actually, or end of the year, as far as December.
By the way, just so you know, okay, your retirement income stretches a whole lot further in France than it does in the United States. I'd say that it costs about half to live in France of what it costs to live in the United States, particularly if you're living in a city where you don't need to own and operate a car, for example. So if they want to stretch their retirement income, this is the place to be.
Exactly. That's very, very important as far as when considering our budgets, and we will talk about budgets in a very short while. As far as wrapping up our discussion on investments, lastly, reviewing your concentrated positions is also key. So if you have more than roughly 10% of your investment portfolio in a single stock, that's considered concentrated position, and it could be risky, of course, when there's market volatility. So you want to be reviewing strategies as to how to possibly diversify that position in a tax efficient manner, whether you should have an option strategy around that position. That's definitely an important consideration with your portfolio. But with that, let's move on to our next topic in the interest of time. And the next topic will be charitable contributions. For a lot of us, that's important to be giving to charities. And for a lot of us, we're doing this by giving cash, which is the least efficient way to actually make charitable contributions. Really, what we should be thinking about gifting would be, from a tax efficient standpoint, it's a lot more efficient to gift appreciated assets or our concentrated positions with high capital gains. Because if we were to liquidate those, we have to pay taxes. If we gift it to charity doesn't have to pay taxes on all those gains, right? So definitely think about, what to gift. We've mentioned already that you could possibly gift your required minimum distribution if you don't need it yourself. And of course, I should say you should be in a strong financial position before considering those gifts.
So give me an example. What's an example?
Absolutely, yeah. Let's say that I've worked for Microsoft for many, many years, and I have, $500,000 of Microsoft shares. But really, my cost basis on those shares is $100,000. So I've got $400K of embedded gain. If I was to sell, I have to pay taxes on that gain, right? But let's say my financial plan is successful and I can afford to gift some of those shares away, as opposed to keeping them for myself. So if I gift, for simplicity of calculation, let's say my portfolio is large elsewhere and I want to gift the entire position. So I take those shares, possibly move them over to a special account, maybe a donor advised fund, where you make a gift, you get a deduction for the gift that you're making, you don't pay any capital gains taxes, and then everybody's happy because you get a tax benefit. The charity just got $500,000 and you never have to pay taxes on that capital gain. Of course, this is as long as your financial plan is successful. That's when we should be considering those types of gifting strategies.
So for people who don't have like, a lot of heirs, right? And they're thinking, what are they going to do with their assets, right? Like, where's it going to all go? That would be an ideal situation, ideal thing to do.
Right. So we first want to take a look at what assets do we have. So we take a look at the balance sheet, right? And we see, where is that money allocated? Is it real estate? Is it individual securities? Is it IRAs? And then really strategize, if we want to gift, where do we want to gift it? Which accounts we want to gift it from, right? So we want to take a very strategic approach to gifting, because that will save us some taxes. And maybe by the same token, we get to give even more to charity because we've saved on taxes.
And we get to do something nice.
Exactly. And that is key. Exactly. So
rather than lining our coffins with it.
Precisely. So let's be strategic about those different gifts. Now, if we could go back to the previous slide, I just want to mention that if we're living in the US and we're gifting to family or friends, we can gift up to $16,000 per year. That's not subject to gift tax. And we just want to be cautious of when we're in France, those gifting limits do change. I know that when you're giving to your children in France, I think the limit is around 100,000 euros every 15 years. So it's a much lower limit that we should keep in mind as we're making those gifts. And then also just after you're in France, just consider different ramifications of donating to French charities versus US charities. Each situation is different, so let's just keep those different considerations in mind. But with that, we can definitely move to some other financial planning topics we want to talk about today. And a big one that comes up all the time with inflation running high is, how do we adjust our budgets for spending in 2023? We definitely want to be thinking about the different spending categories. And that's where I wanted to turn this back to you, Adrian, because you've mentioned cost of living in France is a lot lower. I was wondering if you could tell us a little bit more about that, and maybe more about property taxes in France, rental costs, and all those aspects.
Yeah, it's really amazing. I know that we are seeing some inflation, but it's not quite as high as it is in the US at the moment. I personally have really not noticed much inflation myself, although utility charges we know are going to get much higher, maybe even double. But everything is designed here to use a lot less energy, and therefore you actually spend a lot less. I mean, my electric bill at my apartment in Nice is like 54 euros a month. It's nothing really. I mean, it doesn't seem to be tremendous, but everything they do here is designed to save energy, and therefore you end up saving money. I don't know if people have been reading about the DPE, what's called the DPE rating, which is an energy efficiency rating. And if your property has too low of a rating, then you're not going to be able to legally rent it, and you'd have to make improvements. So they're forcing people to make improvements on their properties so that they will be more energy efficient, but ultimately that will actually save you money. But property taxes here are about, I think across the board, about 1/10 of what they are in the United States. Property tax on my apartment in Paris was 635 euros last year. I think if I had the same property in California, it would be more than $12,000 a year. It would be insane. That being said, they've done away with the taxe d'habitation, which is for primary residents, which means they're going to increase the taxes for what's called taxe foncière, the annual property tax. But even so, because they start so low, it's not really that much. So even if my tax were to double and I would pay $1,200 a year, it It wouldn't be close to what it would be like if it were in California, for example. So this is all part of the reason that it's so much less expensive to live here. You also, there's lots of other reasons, including, good public transportation, low insurance costs, low cost of education, all sorts of other reasons why, it's very inexpensive. Food is not near as expensive as it is in the United States. Eating out is not as expensive as it is in the United States. I had sticker shock in Los Angeles recently. Lunch in a simple cafe for my daughter and I was $100. We were flipped. By the time you add tax and tip, that same meal would have been half that in France, no question. So anyway, how do you budget for inflation? You move to France, that's how. That's
Exactly.
the answer.
It becomes incredibly important, especially as you approach those retirement years, right? And you're on fixed income and you really need to budget, right? Then half the cost. That's a great discount.
Well, okay, and the French don't tax your retirement income. Okay,
exactly.
so
Tax back in the States. Mm-hmm.
Right, well, you get taxed in the States on your U.S. retirement income, but not in France. So, once you retire here, you don't have to worry about income taxes, that's for sure. And even insurance policies, because this is not a very litigious society, insurance costs are very low. My homeowner insurance is about €350 a year. It's just,
wow.
Yeah, exactly. It starts to get silly. And all the people we're working with who are moving over, they're just, they go through their own low sticker shock. You can have a high-speed internet, hundreds of channels on TV, and a VoIP phone to almost anywhere in the world for €35 a month. You can't do that in the United States.
No, certainly not.
No,
your company's bill is probably 200 a month. Yeah.
At least I hear it every day. We make these comparisons every day, and they're the kinds of things that your day-to-day costs are so much less. So even though I know we have a reputation for being a high tax society, or, Paris is the most expensive city in the world kind of thing, that is really not true when you boil it down.
And a very important consideration for those that are looking to move or are considering what budgets will look like in 2023. So Adrian, thank you so much for sharing that with us. That is important. What about currency though, as far as big ticket purchases that people are planning?
Well, right now we've got an amazing exchange rate. We haven't seen this low an exchange rate in, 20 years. It went up a little bit. It's at $1. What'd you say, Patty? Patty said $1.04, I think. Today it rallied a little bit. But generally,
today.
this is an amazing time to make any kind of a large purchase. On top of that, the bigger cities, the price of property in the larger cities in France are soft right now, have gone down a bit because so many people from the cities moved out to the countryside during our COVID 2 years. And so, this is a great time to buy into any of the big cities in France. Highly recommend it.
That sounds great. And that, Adrian, brings us to the next topic as far as big ticket items. For those of us that can't necessarily pay cash for everything or don't want to pay cash, what's the mortgage situation like in France? Because we know mortgage rates on the 30-year fixed in the US have hit 7% at one point. What is it like in France?
Somewhere between 2.5 and 3.5 at the moment, depending on your situation. So it's still really low. And it's been about, over all the years, the rate has always been about half of what it is in the States. Now, it's not that easy to get a mortgage for an American to get a mortgage in France. There's a lot of restrictions, but if you're under the age of 60, if you're salaried, then you have some really good opportunities, and it's definitely worth looking into.
Mhm.
And,
Absolutely.
we believe in using OPM, other people's money, whenever you can.
Especially if the rates are that low. That's really great to hear, and in the current rising rate environment, opting in for a fixed rate that's as low as 2.5 or 3%.
Oh,
That's
right.
that's music to my ears. That's great to hear. Now, as far as our year-end planning, to touch on number 16 that we're looking at, reviewing your debt, one other important consideration for those of us that are outside of the US and maybe are not super in tune with what's going on the financial side, we do have, there is a new student loan forgiveness program for US expats that may still have student loans. So just know that Biden announced that a while back, that they could forgive up to 20,000 of student loans. That's based on your income. If you're single, your income is below 125, or married, income below 250, you're eligible to apply for that debt forgiveness. So reviewing your debts, mortgage rates, maybe locking into a fixed rate as far as your mortgage. If you have student loans, reviewing those, definitely an important end of year consideration.
And if you're a student, you can basically be a student for almost free in France. Just so you know.
Exactly. Yeah.
Compared to the many thousands of dollars a US university costs.
Oh, yes, absolutely. So that definitely adds up. And then you get to learn French when you're at a French university. That's a bonus. Live in a beautiful country. Awesome. Awesome. Adrian, as far as moving on down the list, we're number 17, insurance policies. You've mentioned something about that already. As far as low insurance costs in France, that's great to hear. And it's a good time also to be reviewing those kinds of policies end of year. One aspect of this that I tend to find people forget about is for our US expats that are moving to France or any other countries and are holding on to rental properties in the States. Definitely don't forget to carry liability coverage and umbrella policies on those properties, because even though you're living outside of the US, you're still liable for any claims on your US property. So just keep that in mind as you're reviewing your policies end of year.
Okay.
With that, we'll move on to our last three considerations. If you are a business owner, we talked a little bit about retirement plans for business owners. That's a tax benefit. Another tax saving strategy could be maximizing your expenses in 2022, if it makes sense to maybe prepay some of those or stock up on supplies, on inventory to increase your deductible expenses for the year. That just depends on your tax situation there.
Take a big trip, charge it off to the business.
Go to Paris, right?
I'm thinking of all kinds of ways I can spend money and have fun on company funds.
All creative ways, yes. Now, as far as planning for our families for the new year, we just talked about the cost of education in France being very, very low comparing to the States. But as we're budgeting for our school fees or supplies for our kids for next year, let's also not forget about education for our kids and what we're going to do from that perspective. At Dunhill Financial, we just started our new Kids Corner to really help recognize that we need to teach our kids financial literacy from as early as possible. So each month we'll be sharing practical advice on how to get kids interested in finances. And to start out, we just shared an activity for those that are 3 to 7 year old kids, and then we'll share a new one each month. So we want to definitely invite you to be a part of our newsletter so that we can share those topics with you as well.
I love that. I love that. We got to get our kids in the right mode from early on.
Exactly. And the nice news, the really pleasant news I've heard this week in the last 5 days is 3 of my clients are having babies in 2023. So we'll definitely send them those activities when the kids are old enough to play with those. But speaking of major life events like births or weddings or relocations, anything along those lines, be sure to tell your financial advisors about those types of plans. They definitely are life-changing personally, but financially as well. So just make sure that you've got somebody on your side that's watching out for you, and let your team know. That concludes our checklist as far as the end of year checklist.
Well, thank you, Anya. It's so interesting.
Yeah.
And it really gets me thinking about all the things I need to do in the next month to get ready. I assume that we can now open this up to a Q&A, and I failed to introduce Patty Sadowskis, who's
Here.
on with us also. She and Brian, I think, are going to be, you're going to be checking out the questions. And
Exactly. We've got a couple questions in there. If you have any questions, feel free to add them to either the chat or, and even better, the Q&A, so that we can distribute them out. I'm going to toss in a few pieces of good news in here. I'm going to let Anya be the bad cop on there, and I'll throw in a few pieces of good news. When it came to the budgeting portion, it just happens that we have the Social Security Guide to Americans that are living abroad right here. And one of the things that was really interesting is this year we're getting an 8.7% raise for any of you that are on Social Security. So essentially, those payments are going to go up significantly from last year to the next year.
really?
Yeah.
Mine was supposed to start and hasn't started yet, but so now I can expect an increase?
Exactly. 8.7%.
Wow.
Yeah, that is a good point, Adrian. Right now, we're seeing about 6-month delays when people are applying for Social Security.
Right. Just so you know, I did apply a few months ago and I haven't heard anything from them. But everybody says it's going to take up to 6 months to get a response.
Very, very typical. The second place is most all prices are going up with inflation, but Medicare Part B. So those of you that are using Medicare back in the States, cost is going down from $170.10 to $164.90. So $6 whole bucks, you can go buy yourself a donut with that. But not everything's increasing in prices.
Is that how much donuts are now? $6?
They might as well be, you know, I don't get that many of those. Okay, so we have a couple questions in here. Thomas asked, great question. Is a Roth conversion subject to the same limits as straight Roth contributions?
It's a great question, Thomas. And the answer is it's not. So the contribution limits for your Roth, just a straightforward Roth IRA contribution, is different than when you're considering Roth conversion. So there's essentially no limits to make a Roth conversion. It's just you have to be mindful of the fact that when you're moving assets from a tax-deferred account, such as a traditional IRA, into a Roth IRA, you will pay ordinary income taxes on the conversion. So even if you wanted to convert, 200K, if it makes sense in your situation, there are no limits, but that could push you into a higher tax bracket. So I would definitely be careful with how much I'm converting. And then as far as a Roth contribution, of course, there is a contribution limit, $6,000 per year. If you're under 50, $7,000 per year if you're over 50. And then there are income limits that we discussed as to how much can you make to still qualify for a Roth contribution. So a great question. Thank you.
Paul asks, do clients have 1031s or DSTs? If so, any guidance on them, especially when they roll over into a new 1031? Do you want me to tackle that just a little bit, Anya?
Sounds good.
So
I didn't even understand the question.
exactly. First I'll define the question with a little bit less jargon. So 1031s is a format in the United States in which essentially you're able to sell one property, buy a property that's either the same price or more expensive, and you're able to carry over the cost basis. So it doesn't avoid taxes.
You mean the capital gains tax?
Exactly.
Right, it's 1031 exchange. Okay.
Exactly. So now, essentially, when you're using this type of format, it doesn't work when we go international. So we can't sell a property in the US to buy a property in Europe. There's a lot of creative strategies to try to minimize some of the tax formats and such. And we're happy to walk you through those. DSTs are Delaware statutory trusts, which can be used for real estate. What you really want to be careful of, if you're resident in France, remember we're in common law jurisdiction. They hear the word trust, they're going to say disclose, 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 and a pass through on there. Most every accountant's going to charge you an extra 500 euros just to to file that form. It's not so complex. It's a pass through, still just the same, but you're going to raise some red flags there. So be careful in those types of formats and the reason why and how you're structuring it. So feel free to reach out to us individually, because essentially this doesn't affect everybody. But again, it goes back to Anya's point. When you're doing a financial plan, make sure to talk to your financial planner prior to affecting these types of changes, because if you sell the property thinking that you're going to be able to carry it over into a 1031, you miss out on some other strategies that you can work on.
Okay.
Should I close a French assurance vie before we move to France in early retirement? French citizens will be US citizens at the time of move. So most of the time in assurance vie works very similar to a variable annuity in the United States. So these assurance vies, once you have investments inside of them, they'll look like a PFIC, a passive foreign investment company. 4 letters in the US dictum that basically is an expletive, and we do not want it. It's going to make your US taxes a nightmare. So if you're able to liquidate out of that assurance vie prior to effectively becoming a US citizen, you are going to be a much happier camper, because you won't have those pains of doing your US tax and figuring out how to run those PFICs. You want to run it in effect to where you minimize your market risk, i.e. you want to set up a US structure that you can move the funds into so that you don't, by chance, sell out of the market at the wrong time and then 6 months later get back in when we're much higher. But we can effectively walk you through all of those types of structures. For anybody else on the call, down in Nice, I surprised our friend Jonathan Hadida, our jolly tax accountant, and said there are a few times where an American should buy an assurance vie. And those few times is if you buy a cash assurance vie, so there's no investments inside, and you're going to die within the next 6 months. Otherwise, it's not worth having as an American.
Oh, that's
I haven't had anybody take me up on that.
Brian.
Yeah, I'm trying to give Jonathan a hard time every opportunity that I get, and I know he'll get this recording, and he'll appreciate that. Anya, can you own U.S. mutual funds if you're an American expat living in France?
Well, you could if you wanted to, certainly. Whether you should is another question. So mutual funds generally have higher expenses, and they trade once a day comparing to ETFs or exchange traded funds. Also, we're at this time of the year when U.S. mutual funds kick out capital gains to those that own them. So you should think twice about owning a mutual fund that's more actively managed than an ETF that follows an index. But going back to the question, can you actually own them? Yes, you can if you bought them in the U.S. Through U.S. markets. They're not considered PFICs that Brian referenced. However, Europe has their own set of compliance rules called MiFID rules, and they're not being enforced at the moment. But at some point in the future, if Europe starts enforcing their rules, then you probably want to stay away from US mutual funds. So consider ETFs or exchange traded funds, consider portfolios that are compliant on both sides of the ocean. And that's something that we specialize in as far as putting together portfolios for US expats living abroad, avoiding any compliance issues.
It's beautifully said. I'm going to add to that. There's a new set of rules that have been implemented in Europe that all funds, managed funds, have to be either placed into 3 categories: Article 6, 8, and 9. Now, this isn't an ESG presentation, so I'm not going to bore you with all of those, but basically it's categorized in an ESG format, which means they're getting closer and closer to stating, hey, it's not appropriate to own those vehicles that are managed from abroad, and therefore it's more appropriate to have those ETFs. One of my favorite quotes was in Catch 22. Joseph Heller said, just because I'm paranoid doesn't mean they're after me, that they're not after me. And so when Anya is saying, hey, just because there's no punishment under MiFID doesn't mean that one day there isn't going to be one, and therefore building a portfolio that's going to fit that long-term trajectory of you being in France is going to probably put you in a better position, especially when markets are down like they were 5 weeks ago. Those are the questions that we have on there. I would love to elaborate on two other things, unless you ladies have some other questions that you want to jump out on.
Please go ahead, Brian.
Oh, perfect. I loved that Anya was covering all the charities aspects. I do want to point out a few little pieces on there. Gifting in a charity, gifting securities to a charity, always a wonderful thing. But you also want to think about where you want the deduction, i.e., if you're a retiree and all your income's coming from the States and you're only taxable in the States, 100% all in the States. But if you're a French resident and you have French income, you might be trying to affect your French taxes, and you should consider which charities you're gifting to, both when you're living and when you pass away, because estate taxes can be quite hefty. So things to think about in different situations when it comes to charities. But whenever it comes to giving money to charities, that's always going to be a good thing. The second thing, Anya's done this beautiful video on IRAs and contributions for expats, and it's much more in depth than this one. So just because we're talking about IRAs and making contributions before year end, depending on your situation, dig down deep where you might be taking that money out, because there's certain countries like Germany and Spain that don't have double taxation agreements that are as attractive as France. So when Adrian's being so complimentary to low costs and how there's a great system for Americans in France, it's true. Don't move away to Spain or Germany. You're going to make our lives a lot harder. But if you are going to... So those are my 4 points on my notes. Beautiful job, Anya. Adrian, great questions.
Thank you. Thank you. No, thank you, Anya. She's the
Thank you,
expert
Anya.
here.
Excellent.
Yeah.
Oh, thank you so much for having me, ladies. These are, again, important topics I want people to remember about. So I appreciate the opportunity to get this in front of more people.
Well, and I would just like to say again that, you know, it really makes sense from my perspective to hire professionals, because, you know, I know that there's just no way that I could ever personally begin to manage my own finances and do anywhere near the job that professionals do. And I see it all the time. I talk to clients all the time who, you know, they've managed to amass a nice sum of money, but they really don't know what to do with it. It's just sitting in accounts, not bearing any interest, or they're afraid of the market, or they have all sorts of excuses. And they think that putting their money into an asset in France is the answer. Well, it could be one of the answers, but it's not the only answer. You know, and we are not about just, you know, helping someone buy property. What we do is really try to help someone strategize to make their life better by making this move. And so it's a whole picture. It's a big round picture. And I know that that's what you guys, you know, do. So I'm just, you know, I'm grateful for all of these forums and all your information and all of your help personally and for our clients. So I want to thank you guys for doing that.
Thanks so much, Adrian. It's always a joy. I'm looking forward to seeing your life story. I saw one video of it not too long ago, and I'm going to enjoy seeing it again on.
Oh my God. I'm in for it, aren't I?
December 7th.
Okay, December 7th it is.
That all being said, it is 7 o'clock, which,
And
6
well,
o'clock.
it's 8 o'clock here.
Sorry, I'm going the wrong way there.
In France, yeah.
So
Yeah.
we shall wrap this up, and I wish all you ladies a wonderful Thanksgiving.